The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. I hope everyone is okay today. We will have a interesting show today, I assume. First chart that I've talked about today or bringing into the Tiger Den is a chart of copper. We brought it up yesterday saying that it was looking for much lower prices to the downside, and that's certainly what's been happening. In fact, all the commodities are breaking down badly. Platinum, as you know, we talked about that yesterday. That's also had a huge move, going below, $900 an ounce again. And, we now have gold trading below 1080 now. We're trading around 1078. In fact, 1078 is a key number here over the last few days because that sets up a three drive to a bottom pattern at the 1.618 level here at 1078. So if gold's going to rally, it's going to have to do it from here because if it gets much below, 1075, this has certainly failed, and it will, go a lot lower. They look lower to me. That's you look at the crude oil, it certainly looks like it wants to go to the 40-50 level that we've been talking about. We should bring this up here if I can find it somewhere, and it'll only take me a second to find it, I would think. And maybe that second, there's the second is up, and we should be able to get it in here to Tiger TV and take a look at it. I've now got my charts working so that you should be able to see them now, and I'm hoping that they will pop up like they should. But as you can see from this chart here on the crude oil, that looks like we're going down towards that 2040 level is what we're looking at. Now, as far as the stocks go, we have some more information that I think is important. We had a rally, into that 61% retracement over a few days that we mentioned, and now we're starting to break down. Quite easily in the last couple of days. We've got some support down in the S&P down around that 2046 level, but it does look like we are, trying to get to, another level down there at around the 61% retracement. The S&P the New York Stock Exchange Index, went exactly to the 61% retracement within, 5 1,000ths of a point, and we did the same thing that we did back in 2007. So we'll see what's going on. I'm afraid that we are. I'm having some more problems with the charts. I'm going to have to go back to the old method here because it's just not working. Let me change this a little bit here, and we'll go to the still window application, and we'll see if that will fix the problem. And it's easier for me to do it this way, so I'll just post the charts that way. But you can see that ABCD pattern that sets up a much lower prices in the stocks over the next few days. Now we are over the new moon. That was yesterday, so we're within a day of that. So getting a rally from this level is not unusual because we're down, I believe, 6 days in the NASDAQ, 5 out of the 6 days. So we are oversold. But, watch the rally back, folks, because this has got the earmarks of something, really ominous. We've looked at this chart before, and I'm going to put it up again because it's that important. And that's this long-term chart we get from our good friend Jim Bartolioni, showing the similarities between 2007 and where we are right now. I mean, they are absolutely 100% perfectly equal. You could not ask for anything better than that. So if you like pattern recognition, pay attention to this because it should be pretty important. Even the divergences, as you can see from the lower part of the chart are showing that that something ominous is out there, and it doesn't look very good. Now, I'm going to go across the pond here for a second and show you we've mentioned this stock before because it has all the earmarks of a Lehman Brothers, and that is the Deutsche Bank. That's the largest bank in Europe, and it's the flagship of Germany. And as you can see, we're almost ready to take out the lows of the full moon of September the 28th. And it doesn't take much. And as you can see, we're heading down towards the 1.618 level with this big ABCD pattern. And if we get much below $22 a share, we'll be looking at they're going to have some help to stay afloat, and they're not going to let Deutsche Bank go, folks. I can almost promise you. Well, I can't promise it, but I would assume they would not do that. They will make they'll make it a government bank before they would allow that to happen. Because they've had some tremendous mismanagements with tremendous fines, as you all know, but this market is really much weaker than the market, and it's got major problems. It has all the earmarks of what happened with Lehman Brothers. And I wanted to mention here something important happened this week that you will not realize until a few years down the road, probably about, I would say, somewhere between 8 and 10 years. That time, the Federal Reserve Chairman will probably be Neil Kashkari. Neil Kashkari started his career with Goldman Sachs under Henry Paulson. He worked with Paulson at the Treasury Department when they instigated the Too Big to Fail program, where we were able to lose two of our big competitors with Lehman Brothers, the largest bankruptcy in U.S. history, and then also Bear Stearns was taken over for $2 a share, and that was all part of his working. And then, of course, he ran for office unsuccessfully in California, and then he is now the Federal Reserve president of the Minneapolis Federal Reserve. So remember that name, folks, Neil Kashkari. They've handpicked him, and he will be probably right, unless they catch him in bed with a young boy. I think he's got a real good chance of being a Fed chairman, down the road. They did the same thing with Timothy Geithner. If you remember, he was handpicked, and they did it the same way. So if he moves from one Fed, like from the Minneapolis Fed to the New York Fed or the Dallas Fed or the San Francisco Fed, you'll know that he's moving up the corporate ladder. And if he goes into a chairmanship, you'll see that that's what will happen. He will be the next chairman, not the next one, probably the one after, because he's still relatively young, much younger than Bernanke. But I don't know who will replace Yellen, but that's the one you want to look at because he's being handpicked for this. Regarding our gold and the silver that we're talking about, these look lower, folks. They don't appear to have any support. At least, well, we have some support here in gold at the 1178. But if we take a look at the copper, as you can see, let's try it again, Larry. If we'll look at platinum, you'll see platinum has got another $40 to go to the downside to make a 3 drive to a bottom pattern. So we'll find out if that's going to hold up anything or not. Okay, let's go quickly over. Oh, I have to show you something here. This Norm Winsky was kind enough to send this to me, but we were talking about the new moon yesterday coming in during the market hours. And I have to show you this chart because Norman forwarded on to us. And as you can see that this is a 1-minute chart on the S&P, and within 9 minutes of when the new moon hit, you'll notice that the stock market was making a high. I know that's probably a coincidence, but it's a really amazing coincidence. Also, if you remember back on May 19th, we had a new moon with Mercury retrograde, and Norman did exactly the same thing. So he's 2 for 2. So when he's 3 for 3, we're going to put him up in the gold star category. But I think it's amazing to see how this thing actually worked yesterday in the fact that everything was moving up at that time and immediately turned within 9 minutes of when that new moon hit and then started, to go down. So he's got some really good stuff, and it's all related to planetary things, and so you want to be able to pay attention to it because sometimes it works, sometimes it doesn't, and when it doesn't work, you just got to move on to the next one. Now, I wanted to I just got so much to cover today. I hope I can do it all during this program. But I wanted to show the stock of another German company, Volkswagen. And if you will, we'll take a look at this. You can see how this is a weekly chart of Volkswagen. In 2014, it made a 61% retracement of the high from 2009. And remember, Volkswagen was going up during the kind of collapse. Volkswagen was making its high up around 75 when the rest of the markets were collapsing. And then it fell out of bed during 2010, rallied back to the 61% retracement in 2014, and left this monster gap, as you can see here, about 6 or 7 weeks ago when the news came out about their truth in engineering was not quite as truthful as they had anticipated, and that tells us that they're still having some problems. And we're almost approaching the lows again down here, so Volkswagen is far from out of the woods. So we'll kind of keep an eye on that. And I wanted to bring up what's happened in the stock market here, because this is the overnight view, looking at the hourly chart, because it's important to see some of these patterns, how they unfold during the period of several days. And as you can see, this is the Dow Jones E-mini. We had this is the 135 pattern that was made popular by Roy Longstreet and his son Bill. And yesterday's high at 0.5 there, you'll see that was a perfect 61% retracement from the high that we made back on November the 4th. And we've already exceeded this lows here. We've already taken out the lows of yesterday by quite a bit, and that tells us that the next level would be about 100 points lower in the Dow. And as you know, we are over this new moon, and there could be a move, counter trend move here, because we have been down since the 4th. So we're down, 5 out of 6 days. So we are over sold, but that doesn't mean we can't go even lower. It looks to me like we are going lower, because the chart that we looked at, is just so perfect from 2007 and 2015. It's just beautiful. And when you stop and think that, all of these stocks, well, not all of them, but 125 to 140 stocks are what's causing this move to the upside in the market, because the rest of the market is not doing that well. It certainly isn't. Now, one other factor that I follow, and that is the open interest, and I've marked this with blue and gray, so you'll be able to see it. But this is the third time in the last 5 days where we're seeing a drop in open interest in the equities. That's a pretty scary phenomenon when you actually think about it. So keep in mind that this is a lot of things are happening, and you got to pay attention. But we're over some major support, and if that fails, we are going lower. Okay, we'll take a little break here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I posted into Tiger TV the 3 drive pattern in the gold that was so important at that 1078 level, and as you can see, you know, it was coming down hard, and it wouldn't even stall there for a second, and immediately broke another $5, which tells you that it's you know, it's going a lot lower. That's pretty much it. So we want to keep an eye on that for what's going on, and we'll see what's going on. I'm having a little technical difficulty here, so if you'll bear with me here a second, I've got to change the camera settings because I have a tendency to not handle the technical part as well as I wanted. So we'll see what's going to happen here. I am not going to put that in right now because I'm not able to do that. So we'll just have to wait and see, you know, what we're looking at here. Now we've had some pretty good moves here in these metals and stuff. So we're very, very oversold, but to me it looks like we're still going lower. We started the show with copper, you know, showing you that it looked, you know, quite negative, and it still looks like that's the case. Now, I don't understand what that means. We still see the futures, but I don't know what that means. We'll see. Let me put another chart up here. I want to put the E-mini up here so you can see the that should work okay. Give me 1 second, and we'll get it put up. and we should be able to see the S&P here. And as you can see, yesterday we completed that ABCD pattern right at the 786 of the old high that we had back on the 18th, and now that gives us a price objective of 2046, and we're within just a few handles. We're only 10 points away from that being made, and that's the big ABCD from the high on the 4th. And remember, we are oversold right now, so we could get a rally in here, but that doesn't mean we're going to, folks, because this market has all the earmarks of something incredibly bearish because of the work that Jim Bartolione showed us between the comparison between 2007 and 2015. And I can honestly say that there are not a handful of people that have seen that. No one goes back that far to check the relationships, when we're looking at these. So that's one of the things that Jim does that really makes his work, stand out far and above. If you remember, he was the fellow who told us that the silver was going to bottom at 1410 about 7 months ago before it rallied $5 an ounce. So, $4.50 an ounce. So we want to watch that. So we are coming into some areas where we should find some support. That doesn't mean we're going to, and if we don't, that's going to tell us something even more. Remember, we started the week show with the work from our good friend John Murphy, and he showed that the market was incredibly overbought. As you can see, his relative strength indicator had gone up to above 70, which it hadn't been that high in a very, very long time. And so it's just another indicator that there's some type of something really big happening. Now, if you take out the 150 or so stocks that are making this market go up, and look at just the overall market, it doesn't look very good, because the New York Stock Exchange Index couldn't even rally to a 382 retracement yesterday when the rest of the market was moving. So that's just telling you that the market is incredibly bearish. So we want to watch that very, very closely. I think the situation with Deutsche Bank could be the black swan out there, because if that happens, boy, you're going to see some really, and they've been hit with so many fines that it's going to be interesting to see if Deutsche Bank is going to be able to keep it together. I know they'll stay in business, but from what level I don't know. But below, it's trading around 26 and change now, so another 15 or 20% lower takes it down to that 1.618 expansion at $22 a share. And below 22, that's like when Lehman Brothers was 19. Lehman Brothers had all kinds of wonderful patterns and numbers at $19 a share. I remember this so vividly, and I said, gee, this is either the buy of the century or look out. And the next day, it gapped to the downside, and that was it. It went to zero. And anyway, that's a story for another time. But the commodity markets still look lower. Oil is continuing to break down. Gold is breaking down. Silver is breaking down. Beans is breaking down. Corn is breaking down. Wheat is breaking down. They're all breaking down. So keep in mind that it's not always a one-way street here. So we'll take a little break here. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted into the Tiger Den the chart from Larry Edelson that shows that his cycle work using neural networks on gold. Looks like it's been supposed to bottom sometime in late November, early December would be my guess. And frankly, I didn't get this until the weekend, but you know, once that gold hit that 1192, that completed the big ABCD in the downtrend, and silver hit the exact 61% retracement of $16 and $34 and $16.34 per ounce, and now we're $10,000 below that right now in just a matter of a few days. So that tells you that that certainly was a bear market rally, and we're seeing that also in platinum, in copper, in oil, and all the commodities are getting hit. So that's the deflationary scenario of what's going on. The $64 question is what is going to happen, to the bond market, once the rates are going to be raised. I don't know when. It's been almost a decade since we've had this, and that's what's caused some of these aberrations, I believe. I I don't understand quantitative easing, and no one's been able to explain it to me in a way that I can understand. And because it just doesn't make any sense, but that's for brighter minds than me. But the thing that we've talked about this yesterday, and I think it means a great deal because it tells you, what's really happening with production of things. And if we look at this correlation between the copper market and the stock market, you'll see that the correlation, I only have 10 years shown here, but if you were to go back 100 years, you'll see a tremendous correlation between the stock market and copper. In fact, when we were in graduate school, we would always hear the story that copper has a PhD in economics because it predicts more of what's happening with the stock market and the economy than any of the economists with any of their formulas. That hasn't happened over the last 3.5 years. Whether that's it must be due to quantitative easing, because that's probably the only thing that's really changed is that. So we'll wait and see. So we're weakening up here in the market still. Looks like we're going to be heading down for our area probably around that 2046 level. We're now trading at 2058 in the S&P. The NASDAQ it's bounced a little bit off the bottom, so we'll see if that's going to be a valid place for the market to make some good support in here. But just remember, get ready to sell the rallies, because that's the easiest way to get. So we'll see. Now we've had gold now has rallied since at bottom, as gold has rallied back another $8 or $9 to get above that 1.618 expansion right now. So we'll see what really happens to it from right here. We're still waiting for the Swiss franc to this rally in gold, folks. That's primarily, I would believe, short covering, because we got it down for so much, and then as soon as the shorts start to cover, it doesn't take much to do it. But once it broke that 1078 level, that was a perfect 3-drive pattern, and it didn't hold there for any, just kept going down. So there's no reason to even take a look at it from the long side. You wanted to see at least stop one bar at that point, and it didn't do that. And so, if you're interested in buying gold here, your low your stop would be below today's low. But frankly, I don't see any reason to do it. I mean, the copper looks like it's heading towards 208, and platinum's another $30 lower, at least. And so I don't see any reason. And silver also, I don't see any reason here to do it. The only thing it would be this, the new moon, if the effect of yesterday or today would have it. But I don't see that. That's just not there's not a pattern here to be wanting to be a buyer of gold or silver. Now tomorrow I'm going to try to have Rich Anderson on the show, because we've had such good sell-offs. Well, good sell-off, bad sell-off in the grains. We've made new lows in corn. We made new lows in beans, and we're not too far away from the lows in wheat. So this overall scenario that we have of lower grain prices, and it's not being helped by the U.S. dollar, because the dollar is very strong. We've got the euro, looks like it wants to be heading towards the at least to 105 and probably 99 in the euro, which means the dollar is going to continue to strengthen, and that makes our products more expensive here. And that also affects stocks too, because that means our products are more expensive all over the world, for everything. So we'll see what's happening, and we'll see what goes from this level here. So anyway, we'll watch what's going on, and we'll be able to do that just as soon as we look a little bit as we look a little bit more at some of these other things. The commodity markets just look extremely bearish, and it looks like we're getting ready to make some kind of a bottom here, but where I don't see anything yet. And I'll wait for the pattern to unfold, and then we'll look at it. We've got a caller from Clearwater, Florida. David, are you there?
Yes, sir, I am. Good morning, Larry.
How are you, David?
I am well, sir. How is everything in Arizona?
Everything is good. We have some weather, beautiful weather. We're going to be about 78 degrees, and it'll be really nice to see the fall come in because, you know, our hot weather's gone and our rainy weather's gone. So this is the best time of the year from October all the way through around the 1st of May. And around the May is when we first start hitting 100 degrees, which 100 degrees for us is balmy. So.
Yeah, well, I think 100 degrees is balmy for just about anybody. But I'll tell you, I just personally, and you personally, because I think I shared this with you in previous calls, I was born and raised in Miami. And I don't know, to me, 95 degrees in the desert feels a little, I mean, it's hot. Don't get me wrong. It's hot, plenty hot, but it feels a lot better than 90, 92 in Florida because just the humidity is just, you know,
Yes. I'm certainly aware of that. What can I help you with, my friend?
First off, thank you for the advice yesterday, and I appreciate you taking my call. I don't want to over extend.
No. We're love to hear you call in. So that's we like that you take your time off too. So tell me what we can help you with.
Just kind of a general question. With respect to the Canadian dollar, I spent some time tracing out because I trade using Fibonacci and the patterns that I learned from you I don't know, about 4 or 5 years ago at this point because they tend to work pretty well. At least it's worked well with natural gas. So I'm trying to kind of broaden my horizons a little bit here and get out of trading just the S&P and natural gas. So I've been looking heavily over the last several weeks here at the Canadian dollar, just tracing patterns out and just seeing how well the Fibonacci sequences hold. And it seems to me that, and I know you've got infinitely more experience than I do, so that's the background. Here's my question. In your expectations, or in your experience, I should say, it looks like it tends to hold it pretty well, although I've only looked at it for the last 3 weeks. I know you've been trading this probably for years, but what are your thoughts on the Canadian dollar and whether the 618 retracements, the 786 retracements, and the 1.272 and the 1.618 expansion?
They all work on any of the major they work on all the cross rates, but the major cross rates, the Swiss, the Australian, the pound, the euro, the yen, and the Canadian, they all are just tremendous. And the reason why is it has something to do with the natural law of the market, which is basically fear and greed. I don't know, but I've been watching these for a long time. I don't know why these numbers hit the way they do, but sometimes they're perfect, sometimes they're not, but they work more than they fail. That's the bottom line. And if you can be 60% right, you're doing better than any casino game that you can possibly get. And you can also change the rules on how much you have to risk. So that's what you have to. Canadian's a perfect example today. We had a big number up here at the 133.25 level. The market got to 133. 30 something, 33, 34, and it hasn't, gone it by very much. So here you don't have to risk more than 25 pips to see if you're right in the Canadian dollar. Just like if you did the reverse, David. Remember when it was making a bottom down there a month ago, then you couldn't get anybody that wanted to buy it, and that was the ideal, time to buy it. And so that's what we're watching.
It also seems, what I've noticed, again, this is 3 weeks worth, so I mean, take what I'm saying with a grain of salt. But I like to trade the currencies through the futures exchange, which I realize, it's kind of, everyone likes to use Forex for the most part, but I like it because you can get the volume data, and it also tends to hold, the way Tom likes to trade. It holds the swing points and volume relationships. It tends to hold it pretty well. So it's been kind of interesting, and it's looking like, and again on the futures exchange, it's the inverse of it, so it's 1 over. So it looks like at the moment as I'm talking to you right now, I'm looking at the screen, and it's hitting the 786 retracement of that, testing that big downdraft day from November 6th from the if I remember correctly, that was the Fed announcement. So it looks like it's hitting it with lighter volume and finishing ABCD down. I'm kind of long at the moment. As crazy as that may sound, so we'll see how it goes.
Yep, that's what you got to do. Is you have to protect your risk because you don't know how much you're going to make on anything. So the whole key is to to find the ones that give you a very, very low risk entry, and that's what you're trying to accomplish.
So let me ask you one more question, if I could, please.
Sure. Take your time, David.
So let's say, for example, again, applying this to the Canadian dollar, let's say you look at a 30-minute chart and you see, a bull Gartley, move up, and then an ABCD down. Let's say it hits the 618. Real nice classic setup. So you want to go long. How many? And I believe I asked you this yesterday, but I want to ask you again today. How many pips would you set your stop at below the 618? Let's say for your stop.
Well, I like a dollar amount. Usually when you're trading currencies, around $400 is all you have to risk, which is around 40 pips. In the S&P, if you're trading the S&P on a normal market like we're having right now, you can risk 5 points. But if you remember how we were in September, the market was moving 30, 40, 50 points a day. You've got to increase your stop levels probably out to double that to around 10 or 12 points when the market is extremely volatile. And anytime you're getting a move of more than 25 points in a day in the S&P, then you have to increase your stop loss levels to 10 points. But if it trades like it normally does, 10 to 15 points a day, there's not a problem there. So, and in gold and silver, you're looking at somewhere between $5 and $8 an ounce in silver. And also, in gold, in gold. Silver, I don't like trading it that much because you have to wait for it's 6 times, gold is 6 times bigger than silver. So I love trading gold, but the silver I only trade maybe half a dozen times a year. And, back when it was at 1635, that's when I was really looking at it because, everything was there. It made a new high on the week, whereas gold didn't. It was right at the 61% retracement. Everything said that's probably going to be it. And, so far that's been the case. But use it with a dollar amount that you can be comfortable with, David. That's the main thing because you're the one that has to take the responsibility for it.
Oh, absolutely. And I'll tell you, Larry, the handful of times that I've traded silver, I didn't like it, shall we say. And whenever I see a pattern setting up in silver, I walk away from the computer so that I don't do it. I really, really don't like trading silver. But anyways, would you say applying that same question to the Canadian, and it looks like the same thought might hold with the Australian dollar in terms of the movements within the time
all of the currencies, currencies are 40 pips.
40 pips on the currency.
Yeah,
okay.
And even the yen, as crazy as it is, we were looking at the yen just the other day, and it's done the same thing that we've seen in some of these others. It's sold off more than 70 pips from the 786 retracement, and that's a $700 move. And so if you're in that, you basically made your first profit objective. So the next thing you'd want to do would be to put your stop at break even and see what's happening.
Yeah, no, I hear you loud and clear. Okay, so about 40 pips, it's been your experience at about 40 pips on all the major cross pairs currency-wise?
Yes.
And, okay. Just while I got you on the line here, you might want to just put on your radar, if you haven't already, take a look at natural gas, because we're setting up a nice bull Gartley at the moment. But in about 45 minutes, the EIA report's going to come out, and this pattern can be blown in Lincoln, New York, second. But keep an eye on it. I think if the injection rate is a little bit lower than in that 100 billion cubic feet, we might see it move. So, but from a technical standpoint, it's setting up a nice buy. So just something to think about it in case you might want to trade the natural gas. In any event, Larry, I want you to know I don't take this for granted. I greatly appreciate you and everyone that takes my call over there at the TFNN organization, and I appreciate it, and I hope you have a good day, my friend.
Thank you very much for calling in, David. We enjoy being here, and it's a lot of fun meeting all the folks that we meet across the world. 877-927-6648. We'll be back to wrap up the show.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, boys and girls, I'm back. And ladies and gentlemen, boys and girls, first of all, I wanted to mention here in the gold, the harmonic number in gold is $34. In other words, that's a swing that you're going to see most often if you do statistics. The secondary harmonic number is 1/2 of that, which is $17 an ounce. And if you'll notice, that's exactly what's happened today. We've rallied $17 an ounce off the bottom almost perfectly. So we will see if this is going to hold up. Now, my charts have all frozen up this morning. I don't know if it was because of all the influx of data, of all the things that have been jumping around, but keep in mind, folks, that we are a little bit oversold in the market, so don't be surprised if we don't get a rally, but the rally should be get ready to sell it because it has more of a downward bias than anything else based on that New York Stock Exchange chart that we've talked about every day, and I will continue to bring that up until it no longer is a factor. And as we get lower and lower, and as we should someday get down close to that August 24th low, that's when the fat lady is going to be taking the podium, and there's going to be some major singing. I just don't know how the market's going to be able to handle it if I am correct, but we'll wait and see. As far as the bonds and notes, we're making some type of a bottom in here. I don't know whether the Fed is going to do anything or not. With these collapsing commodity prices, I'm sure they're watching that, and they are absolutely scared to death of deflation. So my guess is they're probably not going to do very much, with the raising rates just because of what's happening to the commodity markets. I mean, they're just getting decimated, and so that tells us that we're not seeing a lot of business being transpired for building new stuff. If you look at copper and some of the other things that we have, and just everything, the grains, oil, everything, Well, I just don't want to get on my soapbox, but it certainly looks deflationary from our point of view. Whether that's going to be bullish to stocks or not, I don't know. The pattern is bearish based on what we've seen, comparison between 2007 and now, and that's what we're looking at. So live every day in an attitude of gratitude, and may God bless, and do something kind for someone who has a lot less than you today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.